Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and Senthil Manikandan of Newberry Capital and Foram Parekh of India Bulls Ventures join me on the show. Thank you to both of my guests for joining me. Today on Hot Money, we'll discuss BHARATFORG, again trading at a 52-week low post a miss as far as the Class 8 truck sales were concerned. SunPharma has now again moved to the lows of the day. It's corrected almost 10% from the time Dilip Sanghvi gave the conference call details, wherein there was a lot to be desired to know. Arvind has managed to rally. Remember, now the Arvind that is trading is the pure play textile business, and probably in Jan, the engineering and the brands business will come in. And NMDC has been on a downtrend. We ask our guest what's impacting NMDC. Obviously, the news of mines that had come out a few weeks ago is clearly impacting, but what's the way ahead? So that's something that we will discuss on Hot Money today. The first stock we want to discuss is BHARATFORG. Now, yesterday the stock was down almost 8% in trade, and today it's managed to recover from the lows of the day, but nevertheless is trading with a negative bias. What's the way ahead for BHARATFORG? How concerned are our guests with the Class 8 truck sales that came out, and what's the view ahead? We'll ask our guests. So, Senthil, I'll start with you. The main reason it reacted was the Class 8 truck sales, and it has been reacting positively for months, and it was a howler. The November number was a howler. Is that a concern, or do you see this as a one-time?
I think when the November numbers came, I think the dealer inventory over there, it was expected to decline over the last quarter in US. I think for December also, I think the numbers were expected to be soft. But starting from the calendar year 19, I think since the inventory levels are still low in the trucks markets in the US, I think they are expected to pick up from the next calendar year. Okay. Because the demand for this heavy duty trucks in US continue to be outstrip the supply. So even they are finding a shortage of drivers over there. So I think it should pick up from the next calendar year. Since as you mentioned, I think the Class 8 truck business contributed nearly 20% of their standalone numbers. The stock has fallen considerably from its 52-week highs. But I think overall, if you look at the business segments of the company, I think they are aggressively going into the passenger vehicle segment. I think there is a huge opportunity in the BS6 with more aluminum parts into the car market. So I think the passenger vehicle share will go up in the next 2 to 3 years. That is an additional opportunity for them. Plus, other than the auto business, they are also improving the defense business and the oil and gas business. So, non-auto business is also shaping up well for them. Okay. I think this fall made the stock bit on the valuation side. I could remain neutral to positive on the stock. So
you're saying that it will pick up next year. So probably December also you might see weak numbers that will come in on the auto sales numbers.
Yes, because if you look at the numbers, it has averaged at around 42,000 units for the last 9-10 months. Now came in a tad bit lower, 27,000 units. But I expect December numbers to be below the average what the numbers posted in the last 10 months. But I expect to pick up from the calendar year 19.
Okay, Foram, you all have BHARATFORG under coverage?
No, we do not have this stock under coverage, but we did see the numbers. Of course, it fell for a reason of Class 8 truck numbers not coming good. But then if we look at the segmental breakup, it is quite diversified. It has commercial vehicles and again, all the other industries like oil and gas, mining. These are also doing very good, and it's getting good traction from those industries also. So we do not want to just be focused towards one segment and give a judgment on it whether you should buy it or not. And secondly, if we look at the North America as a market, I think it contributes only 12 to 13% of the total sales. So we feel that the major market is the Indian market, and Indian commercial vehicle is also expected to pick up from the next calendar year. And we feel that again at current valuations, it is a very good buy. And looking at all the industries that it's into, mining, oil and gas, we feel that it's justified, and the stock wouldn't correct as much as it has corrected till date. And again, looking at the results, Q2 has been reported very good, and numbers have been coming good over the past several quarters now. So we feel that this is a problem across industry of Class 8 trucks, and that is why I think it is all discounted and one should definitely buy at current level.
Okay, so that's the view that's coming in on BHARATFORG. Again, a minor blip probably both of our guests believe that over the next few months, traction again should start picking up for BHARATFORG, because it's not necessary to focus only on the Class 8. The other businesses are firing for BHARATFORG. The next stock we want to talk about is SunPharma. It's corrected almost 10% from the time Dilip Sanghvi gave his media interaction in terms of and the conference call. But ahead of that also, the counter is now trading at a 52-week low. Market cap now in below the 1 lakh crore mark. And so there is definitely tension in terms of what exactly is happening. What's the way ahead for SunPharma? Should you be concerned? Should you accumulate the counter? What did you make of the conference call? So I'll start with the Forum. What did you make of the comments that came in? Are the investor concerns now genuine, or should now valuation be the benchmark, or the comments on the corporate governance should be the benchmark for Sun?
I feel that the performance should be the benchmark rather than the comments or the valuations. And if we look at the performance, the company is just not able to deliver a good set of numbers over the past various several quarters now. And on the second hand, we have many other pharma companies who are doing very good and who continues to do good. So now this also got a reason to fall now. The corporate governance issues and the performance not being up to the mark. So now it has multiple reasons to not rally, and we would want to skew towards Jubilant Life Science, which I had also recommended earlier, and we continue to be bullish on Jubilant Life Science over SunPharma. Of course, valuations are very attractive, and if one can definitely buy with 1 or 2 years horizon. But then when you have Jubilant Life Science, who continues to do very good and has a very robust outlook also, then why go in a problematic stock which would still take time to recover? So
what's the key trigger for Jubilant Life? Why are you pushing this to clients?
So now if you look at the Jubilant Life Science, if you just look at the bottom line has grown by good 60%. And if you look at the pharma business, which is also growing at good 50%, and then the life science business is also doing very good. And they have done some deal acquisitions also, which is expected to fetch them good set of numbers. So that is what the key reason is. The life science business is doing good, and pharma, which is also, both the segments are doing good, and it continues to do good. Valuations are also good, and it has a good trend set of maintaining its CAGR of 20% on a top line. So we feel that there are no whipsaws in the company's financial performance, and we like something which has a smooth move, and Jubilant stands tall on that.
Okay, so Jubilant over SunPharma. What about you? What's your view on SunPharma?
So like you mentioned, I think the last couple of weeks there has been a lot of noise on the corporate governance issues. So even though the conference call shows the management intention to change the distribution lineup in the domestic business, or any other measures could be taken to which are in line with the investor friendly, but there is no concrete announcements came in, and there is no clarity on the whistleblower report also. So I think unless clarity emerges on these line items, I think stock will continue to be under pressure. Even though if you look at the valuations have corrected steeply, and it is compared to this business fundamentals, if you look at the price versus value purely on the business sense, I think it looks attractive at this point of time, because Sun major main point for the moot point for the Sun is their specialty lineup, which has been strong versus other peers. So purely on business sense, I think the price versus value, I think it looks attractive, but corporate governance matters, and even what SEBI is going to do on the whistleblower report is going to be the major factor, considering the price point of view.
Okay, so that's the view that's coming in. And just to make a point, after the drop that we've seen, it's the first time, at least in multiple years, that that the valuation of SunPharma is now behind, a Cipla or a Lupin or even a Dr. Reddy. So valuation now coming in on an FY20 basis is close to almost almost 20 times. So that's the hit that we've seen on SunPharma. The next stock we want to talk about is Arvind Limited. Now remember, the company or the stock that is trading is only the textile business of the company. In Jan now, the brands business as well as the engineering business will list. So now even if you buy now, you won't get that those shares now. But on a pure play textile company, and the numbers will see a 70% drop. That is because the other businesses are not included. It listed at almost 109 levels. It's at levels of 100, and that's the range that is being spoken about. So Senthil, Arvind, now you have only the textile business that's playing. It's been doing well of late, but what's your view? Should someone invest in Arvind, the textile business?
I don't think so, because I would prefer their brands and retail business. Because if you look at their textile business, not only Arvind, even other textile majors, I think much of the capex spend doesn't factor in the true economics of the business. Because via government subsidy on the capital subsidy or the subsidy for the payments, I think the business, the pure textile business doesn't make the kind of ROEs or ROCs. So I would rather go for a brands and retail business, even though the valuations, we have to wait and watch what kind of valuations the business lists in January. But there is a clear trend of consumer discretionary spend going towards these brands and retail, not only Arvind, even for ABFRL, etc. So pure textile business, if you look at, they are into denim and fabric and garments. Now the company is planning to spend additional 2,500 crores over the next 5 years, and they are planning for a vertical integration, going more into garments. So these are positive measures, but I would rather prefer the brands business.
Brands business. So you'd avoid the textile business as of now. Foram, or what's your view on the textile business of Arvind?
I would also say one should avoid textile business, because we have seen it has just demerged. So now it's going to focus on enhancing its capacity. For that, it would require a capex, and all these things would definitely take a hit at the bottom line. So even if I have to wait for the listing of the brand companies under the Arvind segment, but I would not want to go for Arvind as a brand, because we have seen there are many other brands in other listed entities who are doing good, and currently we have seen apparel industry has been doing very good, and they have even turned around. So I had also given a buy call on ABFRL. And I would always be skewing towards ABFRL over Arvind, even as a brand business, because if you look at ABFRL, it has successfully turned around, and it has a good brand in its portfolio, and company is maintaining its bottom line and taking conscious efforts to do good by reducing its debt and taking all the right measures. So Arvind as a textile play is definitely an avoid right now, because it would go under a capex and all this transformation phase. So it would still take time to pick up from here on. So by that time, I think ABFRL, which has already proved its financials and financials, so I think one should definitely go for that stock, because it's corrected significantly from its highs and is likely to do good in the future also.
Okay, so that's the way guests think about. So Arvind as a pure play textile company is something that they would not like at this point of time. Probably they need to wait out till the time the brands and the engineering business list probably in January. And the last stock we want to talk about is NMDC. Now the counter has been down in trade post the issue of whether they will be allocated certain mines, or certain mines will be taken out from them. That was the clarification that was needed from NMDC as well as the Karnataka mines minister. But nevertheless, it's down 28% in the last 12 months. Hasn't corrected as much as the others, but nevertheless, over the past few years, NMDC has been a marked underperformer. But Foram, what's your view on NMDC? Will the weakness continue?
Yes, we certainly feel this will continue, and I feel one should avoid so many flaws in the company and the sector. We would want to strictly stay away from the sector.
So across the sector, you all are not liking. Yeah,
because it's highly dependent. I mean, of course, US and China trade wars will definitely impact the commodity sector. And at this juncture where we have such healthy correction and so many other stocks available and the sectors, trading at attractive valuations, why you want to risk your money in a sector which is so much dependent on the two economies that we cannot foresee about. So it's better to stay away from such speculative sector and invest in a safe sectors like NBFCs are there, good NBFC stocks, FMCGs, automobile companies. So I would want to skew towards those sectors where we have certainty over commodity sector.
Okay, you agree metals as a pack should be avoided, or you have a positive view on especially on NMDC and the other metal counters?
I could say it's not a completely avoid. I could remain neutral to positive based on the different businesses that the company is into. But particularly NMDC, I think China's winter cut will be there till February. So once the winter cut's over, there will be a revamping of the steel mills over there. So there should be additional inventory build up starting from end of February. So if you see, I think that could be the reason. I think there has been around correction in the iron ore prices also starting last 1.5 months. But particularly with NMDC, I think one is the Karnataka mines that you highlighted. Second could be the global level correction in the prices. But apart from that, I think if you look at the current market price, I think at a dividend yield of around 5.5%. Plus, over the next year, I think they will be starting their the steel plant also. I think there are news like the government is looking to diverse the steel plant, but there is no measures on that. But the overall the free cash flow generation and the dividend payout and the valuation looks attractive. I could be watching for their performance in the steel plant. If there is a diversing the steel plant, that's a positive thing because much of the free cash flow has went into this. So that could be the trigger for the further upside potential. But at this point, I think there is no downside left in the stock.
Okay, so we're getting a little contradictory views as far as NMDC is concerned. Forum is indicating avoiding the metal space, especially even NMDC, while Senthil says that the downside potential looks limited at this point of time. But we completely timed out with that. It's a wrap on today's edition of Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint. First, I forgot. Thank you so much, Senthil. Thank you so much, Forum. But we need to thank our guests because they're here. But with that, it's a wrap on today's edition of Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.